Good evening, everyone. We're just gonna wait a couple of minutes, a minute or two, to just let people join the stream so that they can start watching. Hi, guys. Good evening. We're just gonna wait for a couple of minutes to let everyone join in. Hi, guys. Good evening. This is Kaizad Marulia here from the CMT Association. Welcome to this session. What we want to cover today is introduce you to the subject matter of technical analysis, the CMT Association, and so on. I work with the CMT Association as the head of partnerships, along with Joel Panikod, who heads the association here in APAC. I'm going to dive straight into the presentation. I believe you can already see my screen. So let's just dive straight in. So, why are all of you all here today? What we plan to do today is to give you a glance into the global investment markets, how financial markets operate, get a view into the various careers in finance, and where does the world of technical analysis come in? How the CMT Association operates in this world, what we do, and how you can get engaged with technical analysis and the CMT program. A quick introduction about Joel and myself. We look after the operations of the association here in APAC. Uh, Joel has over 2 decades of work experience. Most of his career has been in the education space in one way or another, whether it was starting out his career in the MBA test prep space or running edtech startups. He has been very closely knit with the education community. Over 7 years of his career have been at Bloomberg, 7.5 actually. And even at Bloomberg, he built the education business for Bloomberg from ground up. So today, if you see a terminal, a Bloomberg terminal in any of the institutes, it's actually to do with the entire industry ecosystem that Joel has had built. I was fortunate to work with him in my path as well when I was helping him in the education space at Bloomberg as well. And finally, before joining the CMT Association, Joel headed an edtech startup in the social enterprise space, where again he was responsible for their operations across Asia and Middle East. A little bit about myself. I have over a decade of work experience myself. I started my early career in the commodities market, quickly moved into the sales and marketing domain. I worked with Bloomberg for about 6.5 years. I overlapped 6 years working with Joel. And in Bloomberg, I covered various responsibilities, including heading the education business after Joel for the South Asia region. And finally, just before joining the CMT Association, where I now work as the head of partnerships, I had a brief stint in consultative selling across the APAC region in the knowledge industry space as well. So I'm going to dive straight into the topic or the crux of the day, right? What is technical analysis? Some of you all may be aware, some may be just being introduced to as much as these two words. So we're going to dive straight in, and I'm going to take a couple of minutes to explain what technical analysis is. As you can see from the screen, technical analysis is the study of prices and volumes in freely traded markets with the intent of making profitable strategic or investment decisions. What does this mean? It's basically a trading discipline employed to evaluate investments and identify opportunities in price trends and patterns. So let's dive a little deeper. TA or technical analysis is nothing but understanding mass human behavior and how it plays out in the market. Give me 1 second now, guys. I'm just going to double confirm on the audio. Okay, I see the audio settings are fine. Right. Sorry, jumping back in. So, what does it mean? It means like how this human behavior plays out in the marketplace. You all have all studied the law of supply and demand at some point in your careers, in your the educational careers, right? Technical analysis is nothing but the application of these laws in the marketplace. What is very important to note here that the market must be comprised of a large number of buyers and sellers who are acting freely based on their own decision or information that they have gathered. Now, TA or technical analysis is the study of these behaviors and how it relates to price, volume, and other indicators. Behavioral psychology, which has picked up momentum in the past 15 years but has been around for a very long time, it states that humans are inherently biased. They have some behavioral biases. And in a collective space like markets, they tend to form predictable patterns. Patterns or emotions that play out in the market, like fear and greed, which are deep rooted in our own survival throughout history, play out even today. So, for example, things like fear of losing your money, fear of missing out on an opportunity, holding on to positions for too long in anticipation that prices will go up and having the greed for it. All of these are a part of technical analysis. So you study how they play out in the market, how the same plays out in price, trends, patterns, and then take informed investment decisions with the correct risk management in place. So the three assumptions that you see at the bottom side of the slide deck is that the sum total of all information out there, which results in supply and demand, acts out in the marketplace via buyers or sellers. So whether you buy a security or sell a security is based on the sum total of all the information you've gathered and the beliefs that you have. And the price that reflects this action discounts all of this. Hence, price discounts everything and takes into factor all of those beliefs. Another important point over here is that prices move in trends. Now, these trends can be short term trends, medium term trends, or long term trends and could play out even in larger and longer time cycles. But more importantly, these trends have a repetitive or continuous nature, and patterns that form are fractal in nature. What they mean is that they are repetitive or they repeat themselves across various time periods. And finally, history repeats itself. So fear and greed create repeatable behaviors that we have seen before. So the market panic, euphoria that you see playing out again and again, though the causes may be different, keep tending to happen. And technical analysis is nothing but the study of this as well. So why does it matter, right? What is in it for us and why are we here today? There's a large misconception that exists about technical analysis is that it is only used for trading or, for that matter, short term analysis. And this is extremely incorrect. This assumption or misconception is extremely incorrect. The discipline of technical analysis covers trading and investments, both short, medium, and long term trends. Martin Pring, who's a published author, one of the founding members as well, he says in the books and in his session talks about cycles over 20 and 30-year time periods. Technical analysis is nothing about recognizing these trends and patterns. and how they relate to short, medium, and long term time frames. So have a look at this chart. As you can see that from a first glance, the trend has predominantly been upwards. And this is a longer term view of the security or this price movement. But if you focus during the financial crisis period, you see that the market dropped from 6,000 levels to 2,000 levels in just a year. This would wipe off the entire capital of an investor would have he or she entered at that point in time. A similar scenario you see happening towards this side or the fag end of the chart, where the market crash of 2020, March 2020. Now imagine someone who had invested at the peak just before the crash, and the drop that they would have had the impact if the correct risk management practices were not put into place. We actually personally know of people who put in money at the peak just before the crash, and they were so scared to actually, uh, they actually cut off their positions way too far, making heavy losses, and were afraid to get back into the market when the prices started to rise. So they missed a significant portion of the price rise only because their emotions played out or they did not do the correct analysis. Apart from traditional instruments, securities like cryptocurrencies, today there is no fundamental data about them. And the only way to analyze them is through the application of technical analysis. And we'll dive a little more deeper into this, but even for C suite executives, right, who analyze larger markets over longer time cycles, technical analysis forms a very key skill set because it actually reflects information over different time periods that are relevant to their analysis. And we'll dive a little deeper towards the latter part of the presentation. So, where does technical analysis fit in the industry? Anyone with either a market facing role or a customer facing role can use technical analysis, and technical analysis can form a very important skill set in their workflow. Now, most often people think that technical analysis is nothing but charts and only charts. Um, Charts was an easier way to put large quantities of data in easily consumable form, but technical analysis is much more than just charts. Historically, when computing power wasn't there, when you didn't have supercomputers churning out data in literally milliseconds, charts was the easiest way to represent data and see trends, patterns forming. Before big data was even a buzzword, it was the only way to analyze data. Application of statistical methods was, of course, easier charts, but it's not the only format of technical analysis. Which brings us to this knowledge stack. Now, all of y'all would have heard or spoken or interacted something about fintech, right? It's a buzzword today. And people think fintech is nothing but coding and programming languages. But what do you do if you, as rather, people think that if we learned the programming languages as you see on top, they would have made a good career in fintech. Funnily, the number of languages coming out, the evolution of languages is so fast paced that some of them are becoming redundant today. But let's assume that you learned one of the most important languages in coding. But what would you do with that skill now? You need to apply that to something, right? And that's where the data comes in. Now, data could be price data, company data, industry data, macroeconomics, news, anything. And now let's say that data, of course, is available, some free, of course, some paid data versions, of course. But let's say I gave you the tech tools and the data. What would you be able to do with it is the question. If you do not know how to apply data, how to apply the rules, how to massage this and put it into practice, then most of these skill sets are useless. And that's where the first principles of technical analysis comes in. What this allows you to do is it teaches you how to leverage the data. What are the kind of things, studies that you can put into place? And what's more important is that the first principles of technical analysis and the studies about it are geography and asset class agnostic. What does that mean? Once you've learned the basics of TA, you can simply learn a little more about a security, a geography, and put those principles into practice. So, whether it be stocks, bonds, currencies, commodities, cryptos, or any instrument that is traded in the market, you can leverage the first principles to analyze and take informed investment decisions. Now, this is a very important slide, and this is a conversation that Joel and myself have been put into multiple times. Very often, we hear various market participants, including students, professors, uh, individuals, professionals from firms, always ask us the question, what is better, technical analysis or fundamental analysis? We get asked this question quite often, and to compare the two against each other could not be further than incorrect. This couldn't be more incorrect rather. Comparing technical analysis, fundamental analysis is outright wrong. The best careers and investment decisions are shaped by complementing skill sets of technical analysis and fundamental analysis. The best informed decisions, leveraging the best parts of both of these studies, helps shape careers to great extents. While fundamental analysis focuses on the company, its operations, revenue, earnings, management, etc., technical analysis focuses on price and volume and how interactions and behaviors play out in the market, like momentum, price patterns, trends, and so on. So, while fundamental analysis might be able to help you understand the potential value of a particular company, uh, what technical analysis does is it helps you time your market entry and exit. It helps you take correct risk management practices into place. So complementing the two skill sets goes a long way. What I would like to add to the favor of technical analysis is that the data and tools available are far more accessible. You have a lot of free charting softwares, a lot of free tools, a lot of free data. And even if you can't do fundamental analysis, technical analysis by itself can help you in your investment decisions, market analysis, risk management, and so on. So, we talk about this thing called as the full picture. Ralph Acancora, who is one of the founding members, conducted this in his presentation. He says that it's important to know these aspects about a company, right? Competition, P ratio, dividends, products, management, helps you understand the intrinsic value of the company. But to get a full picture, you need to complement it about with price, volume, open interest, supply, demand, what is the psychology in the market, stocks. If you were to take a half informed decision, you would only be able to see a half picture. And that's the reason you need to take a full picture view, complementing the two skill sets as you see on the slide. So let's dive into what the financial services industry is now that you know a little bit about technical analysis. We've created this chart as a quick representation of the financial services industry. Note, this is not all of it, but we try to represent as many market and customer facing roles that we could. So, whether you're looking at segments like banks, corporations, broking, education, fintech, journalism, investment management, anything, and across various roles, right, like treasury, research, trading, portfolio management, hedge funds, teaching and research, any professional certifications, and so on. Technical analysis of skill set comes into play across this entire chart and many, many more roles and positions and firms. So I'd like to take a moment over here to discuss something called as the story of risk. This is very important. It gives a quick snapshot. We take a quick, or rather a small chunk of the financial services industry to explain how prices, patterns, behaviors play out in the market, how they influence counterparties, other parties, related parties, and so on. So, what is the story of risk? This story showcases how a global financial ecosystem works and how various actions interplay. But more importantly, it teaches you how technical analysis as a skill set can help you not just understand, but analyze and navigate this intricate ecosystem. So let's begin. Say that there is a ship that is setting sail from Australia, and say that ship is carrying coal, right, from Australia to India. Now, let's assume that the ship has been hired by Adani Power to transport this coal from Australia to India. And say that there is a storm that has happened now in the middle of the sea. Now, because of this, there has been a delay and the ship cannot reach in time. Say that there is a delay of a month. Now, I'm going to pause for a moment. I want you all to think on your side. What are the kind of potential risks that Adani Power is now facing? I hope you all have put on your thinking hats, thought of a few aspects. The obvious choices, of course, would be loss of the ship, loss of lives, because the storm is really close. But let's assume that there was no loss of lives, there was no damage to the ship. But what are the other kind of losses that could be, right? There is a logistical risk loss, there is an efficiency loss, there is an operational risk loss, there are financial risk loss, defaulting on loans, loss of cargo, etc. So just by a single delay on account of a storm, multiple entities, organizations, departments get impacted. Now we'll see about how this works. Let's focus on one entity or rather one department and let's focus on the treasury team of Adani Power. I'm not sure how many of you all know what a treasury team does, but think of it as the treasury team is the one team that manages the finances of the firm. Everything from financial aspects to procurement to raising capital to managing day-to-day expenses to financial reporting, everything. So put yourselves in the shoes of the treasury team at Adani Power and now think of what could be the financial risk that would impact Adani now. Take a couple of seconds, think about it. You are the treasury manager sitting at Adani Power, your ship has been delayed. What are the kind of financial risks or risks in total that are there? There are a few actually over here. So things like fuel costs going up, logistical prices going up, the ship being hired for a longer time, so that causes more cost to the company. But I'm going to focus on two aspects over here. As you can see from the slide itself, there is a forex rate risk and the price of the raw material, which in this case is coal. Now, Adani Power is not in the business of taking risk, right? Their business is getting the fuel, converting it into electricity, and selling that electricity. So it doesn't take on risk unnecessarily. So now, how do they mitigate this risk? They create or enter into various hedging instruments like forwards, swaps, options, and so on. So what they do for the same is that they reach out to the banks and they'll reach out to the banks and say that can you all help quote or structure an instrument or a security that helps them hedge this risk by locking in prices of the forex, of the currency, of the coal prices, and so on. Now, either the banks will structure this and quote a price to Adani, and Adani would receive these quotes from various banks and choose the best one, or they can create a structure on themselves, send it to the banks, and ask them to quote on this. Now, Adani will pick the best possible quote that they receive that works for them, and think of this is like buying an insurance against the risk. Now, what's happened is that the financial risk has moved from Adani Treasury to the bank. Now, the bank treasury manager has got the task to figure out what to do with this transferred risk because it's not their job to take on risk on their books as well. So they now have to figure out how do they mitigate the risk. So what they do is they reach out to intermediaries in the form of brokers, investment managers, hedge funds, and so on, to via a process called securitization, and they convert this risk into a security, and via these middle parties, land up selling it to the final entities, which are your pension houses, mutual funds, investment managers, hedge funds, large scale institutions, and so on. So as you saw from this chain over here, right, the simple financial risk of one item over here has now passed all the way from Adani all the way down to the final investment institutions, who, of course, by themselves do not keep it on the books, they mitigate it as well. So, this is the journey of financial risk which originated from a ship. Now, let's take a second view into the market. What is Adani's workflow? What do? They get coal, convert it into power, and then sell the power for the end consumer. Now, to conduct this workflow, they have a lot of requirements. They could need funds for setting up a new plant, funds for procuring raw materials, operations, sales, etc. Now, for this, they would need to raise capital. This could be short term capital requirements, working capital requirements, long term capital requirements, and so on. What they do is they reach out to intermediaries like investment banks or large broking houses and raise the funds from the market, either in the form of equity or debt. Now, one thing important to note, and as you see from the slide, we took the example of Adani Power, but you see logos for Reliance and Tata as well. Why this is here is that when you are issuing or raising capital, the rates by themselves would not be dependent on what Adani Power does alone, but also on other market participants like Reliance, Tata. Say Adani Power had to go down, Reliance and Tata would come in, swoop up the market, provide more, their prices would go up, and so on. Alternatively, if Adani Power is entering the market to raise capital, they can't just raise it at any rate. They will have to understand what are the current prevailing rates that are there for their peers and then base it somewhere around that. So, what Adani Power does is that they raise capital through these middle instruments and they issue it to various institutions by private placements. Now, this could be large institutions as you see out here, or it could be through to the general public via exchanges, via brokers that we deal with. So now you see a simple act of raising money has now intertwined not just with larger institutions, but even retail people like us. And institutions by themselves also have fund requirements. They also want to securitize their workflow. So they also reach out via middlemen to the final investor. So what you saw from this workflow that now an operational risk as well, or the operational task has now moved to the final end retail investor, which is us, the likes of us. Apart from these players, we also have other players like educational institutions, academia, who study the space, teach it, research it, and so on. We have media houses who observe the space, comment, quote on it, cover this actively, and need to understand this ecosystem well and need to understand the implications of each action of this ecosystem. And finally, you have the regulators, the likes of SEBI, RBI, Ministry of Finance, IRDA, all of these guys, who oversee the entire market, watch this space to make sure that they protect and safeguard investor capital from all the wrongdoings or any kind of adverse outcomes. So now you saw from this story of risk how it's passed on. So now, what does the transactional workflow split into? In any firm, there are three segments, which is front office, mid office, and back office. Front office takes care of your business decisions, transactions, dealings, and so on. Mid office takes care of your risk management, reconciliation, reporting, so on. And finally, back office takes aspects like compliance, data crunching, and we also include aspects like recruitment in it, who hire for the firm for various roles. Technical analysis as a field of study is primary for the front office field. But the mid office and back office do leverage the study of technical analysis if they have any customer facing or market facing role. So, for example, recruitment, though do not directly face the markets or customers, they need to hire for positions that will face that. So, an understanding of TA is very important. And apart from their professional capacity, TA as a skill set comes very important and to use for their own individual investment management as well, right? So this comes to the question of careers in technical analysis. Most people have this misconception that technical analysis is a useful career only for a technical analyst. But again, this couldn't be further from the truth. Whether you are investing your own money as an individual or undertaking any customer or market facing role, as we saw from the previous slides, technical analysis can be a very critical and important skill set to excel your career many folds. We've taken another snapshot over here, broken down the same segments like corporations, banks, brokers, investment managers, and so on, and listed out a few roles under them. So, whether it be dealers, sales traders, corporate sales, ALM managers, economists, even all the way up to C suite executives, they can all leverage the skill set of technical analysis in their workflow. Some of the modern careers where TA comes very crucial into the marketplace is quantitative finance, algorithmic trading, systems design, systems development, and we've started cryptocurrency at the end, right? This is because if you look at cryptocurrency as an asset class, there is no fundamental data backing it, which is one of the biggest criticisms about the space. The only way to analyze a cryptocurrency instrument or an asset is with the use of the skills or the studies of technical analysis. Understanding patterns, trends, price movements, volume, mitigating yourself from adverse risk by putting in correct risk adjustment, risk management practices. All of this comes under technical analysis. Even if you look at non-finance careers, right, like journalism, education, research, like we saw in the previous slides, TA becomes a very important skill set. And there are a few areas in which research is going on today where TA plays a critical role. As you can see from the slide, there are various options out here, but the one I want to focus on is the behavioral finance part. Now, behavioral finance has been around for a long time, as I said earlier, but in the past 15 years, it has picked up its, let's say, pace or rather acceptance in the market. Traditionally, economics was based on the assumption that humans are rational, human beings are rational, and they make rational decisions. Behavioral psychology, when it came up, upset the entire world's view of economics. And what behavioral psychology, then by extension, behavioral economics, and then by extension, behavioral finance, came and completely changed these notions and assumptions. It proved that humans are fundamentally and predictably irrational. We have personally done multiple sessions about behavioral psychology, cognitive biases, and how they play out and impact our investment decisions. And we sat through a few sessions by esteemed speakers from across the globe. Now, what technical analysis does as a subject is that it looks at the sum total of all these behaviors of people within a marketplace and tries to analyze the results of them on price. So, the price, as we saw earlier, discounts everything across all of these decisions, all of this information, all of these emotions, and then predicting patterns, trends, or rather not predicting, but analyzing patterns, analyzing trends, putting in correct risk management practices in place so that you don't make an adverse effect on your capital. That's what technical analysis does. And how to protect against risk is the study of the. Now, that's where we come to if you want to learn more about it. That's where the CMT Association comes in. So, what is the CMT Association? Um, we are a global credentialing body with nearly 50 years of service to the financial industry. The association is a global organization with member presence across 137 countries. We have about 36, 37 internationally active chapters, and over 35,000 individuals go through some type of CMT programming across all of the formats of content that we put out. A little bit about our history, what we did, what the association started off was a small group of sell side analysts in Wall Street. Today is an association of over four and a half, 5,000 members worldwide. It began in New York in 1967 as an informal meeting of a group of technical analysts who met to discuss things that they learned in the market, in their practice, trends that they observed, patterns that they saw. Um, Ralph actually told us a story about how they had this war room and they actually used to plot a chart across the wall, hand draw it, hand write, hand pinpoint patterns, and so on. Ralph Acampora, John Brooks, John Greeley, these are the guys who are credited as the founding members. and originally 18 members incorporated the CMT Association as a not for profit back in 1973. Initially, they met to discuss the subject matter of technical analysis, but what they quickly realized that there was a need to qualify professionals who pursued this discipline or this education with the highest degree of practice, dedication, and so on. And there was born the CMT program in the 1980s. The association began developing and administering exams in the mid late 1980s, and charters were first awarded to the graduates of the CMT program in 1989. In 2005, FINRA, which is the Financial Industry Regulatory Authority, submitted a ruling with the US SEC, Securities Exchange Commission, to accept CMT program level 1 and level 2 exam as an alternative to Series 86. What this means is anyone who's cleared both the levels of the CMT program is exempt from the Series 86 examination that is required for all financial analysts there. We are similarly working with other regulatory bodies across the globe. IROC, for example, in Canada has provided exemption. We're working with the likes of SEBI in India, Monetary Authority in Singapore, and so on. Now, in 2018, the first office outside of New York was set up. It was set up in Mumbai as a liaison office. And last year in 2021, the liaison office expanded to become a private limited company and became the Asia Pacific headquarters. So now we handle the entire APAC and part of Middle East operations from the office here in Mumbai, India, where I'm sitting today. And a special board subcommittee was set up to promote the growth of the association in the APAC region. So, what is this Chartered Market Technician program that we've been talking about, right? It is a credential which is the preeminent and global designation for practitioners of technical analysis. It is awarded to those who demonstrate a mastery of core body of knowledge of investment, risk, and portfolio management settings. As we have discussed before, that the CMT Charter is awarded only to those members who have not only successfully completed all three levels of the CMT program, but very importantly, they have to show relevant and approved work experience for a minimum of 3 years and must be active members of the association. So even people who have got the charter, if they stop being an active member of the association, cannot use the CMT designation across the name. The exam occurs twice a year in June and December. So the minimum time one can take to pass all three levels is 18 months, which is why we always say that you should get a head start in preparing and studying and giving your exams so that by the time you all graduate and are out in the market, you all are career ready to a substantial effect and can go to recruiters and say that we have done, let's say, level 2 or level 3 of the CMT program. We are career ready, market ready, and sets you apart from the general audience or the crowd that's graduating along with you. The level 1 as a subject introduces you to the basics of technical analysis via key concepts, theories, backgrounds. Level 2 dives deeper into the aspects of integration, use cases of technical analysis, how do you implement that. And finally, level 3 judges you on the theory, analysis, systems design, ethics, etc. Ethics is an important part and is covered across all three levels. As you see from the lower part of the slide, the approximate preparation times, the length of text, the average pass percentage is all mentioned out here. These figures have changed a little recently, but they're in the ballpark range over here. Now, what does the CMT charter help you demonstrate, right? It helps demonstrate core knowledge in domains of risk management, quantitative systems development, portfolio management, and applied behavioral finance. And under these various aspects, as you'll be able to see later as the curriculum breakdown. But whether you plan to use it in your professional career or for your own investment decisions, the CMT program has a lot to offer. And we did a survey a little time ago amongst our charter holder members community, amongst the market, to understand what is the value of the CMT charter, right? When we say it's the gold standard of technical analysis education and achievement within the financial services industry, what does earning the CMT charter entail for our members? So we conducted this survey and we found out various benefits as you see from the right hand side of the slide. As you see from the top, of course, the highest was unsolicited contacts from recruiters. But there were some very key insights that we got, right? That a lot of our members were given more responsibilities within their firm. They were uh, seen as more qualified, able to take correct investment decisions now that they have practiced and displayed a rigorous body of knowledge in their investment and risk management performance. They were offered new positions, they were offered promotions, along, of course, with a salary increase or bonuses. This slide basically briefly breaks down the body of knowledge that we have across all three levels. This is a very short summary of it. A detailed breakdown of it is available on the CMT website. So if you all are interested, go through it. You'll understand what different levels hold, how you can prepare for it, what will you learn under each level. And then, which brings us to the academic partner program, and that's why I'm doing the session today. So what is the academic partner program, right? It is our effort to increase the awareness and presence of technical analysis within the education space. What we do is we partner with accredited educational institutes such as the ones that you all are at, both in the postgraduate and undergraduate level, to integrate the subject of technical analysis into the curriculum of the institutes. We sign non-commercial MOUs with the institutions under the partnership and conduct various engagements and offer various, for lack of better words, incentives for students to go through the program. Some of them I've highlighted on this slide. So there are various initiatives that we run. Like for example, the first one that you see is the Campus Ambassador Program. It is a live project that happens throughout the calendar year. Two students are picked up from each institute to go through this project. They work with the association, cover assignments on areas of marketing, finance, strategy, operations, and in return, they get sessions on career guidance, soft skills, mentorship, and so on. We run an internship challenge, which happens towards Q4 of every calendar year, and winners of the internship challenge, then five winners get selected to become full-time remote interns with us during the summer cycle and actually learn what it's like to work with a global association like ours. um, Both of these competitions that you see here, this plus the investment channel shall cover, helps introduce you to technical analysis. You don't need to know TA, it introduces you to the concepts. So, via the internship challenge, we introduce you to short articles, videos that you can review, understand, and then provide relevant outputs as per the competition guidelines. The investment challenge, on the other hand, is a simulated portfolio trading game. What this competition does is that we have some study contents, videos, recorded videos that you can go through, understand basics of technical analysis, understand what is patterns, trends, charts, how do you read them, how do you put them into practice. And then based off that, on a dummy corpus of your portfolio, you invest in live real-time markets via a platform and based off technical analysis investment strategies. So you put TA principles into use, TA studies that you've gone through, and so on. What is important to note is that the evaluation criteria, the top evaluation criteria, of course, there are many, but the top one, we judge them on risk adjusted returns. So it's not just about how much return as a percentage you made, but what was your max drawdown? How much of your capital did you risk to get this return? And what you should know is that last year we ran the pilot of this competition at a pan India level for academic partner institute students and CMT candidates. And one of our partners interviewed all the winners across all the categories for a full-time position at their firm for of a prop fund manager. Apart from these competitions, we conduct various sessions and workshops for, like, for example, the careers and technical analysis session that I'm conducting today. We can get charter holders to come in and conduct workshops on special requests. You get access to CMT events like our chapter meetings and other ones that we host. And finally, and the most important piece of the academic partner program is the scholarships. So, as a part of this partnership, post full-time students of academic partner program institutes that are postgraduate get scholarships for level 1 and level 2. So as you see from the slide, the average cost or the approximate cost for each level comes to somewhere around $800 just between the registration and the exam fee. This gets subsidized to just $130 uh, per level. So let's say if you were for postgraduate, it's for level 1 and level 2. For undergraduate universities, it's just level 1, and for faculty, it's all three levels. So you can leverage this scholarship, get down to preparing for the CMT program before you even hit the market for your recruitment drives. One more thing to cover about the scholarship is apart from the CMT exam fee and the registration fee, our partners like Wiley and Optima provide a lot of benefits as well. So, for example, Optima, which is a charting platform, which you can see from the slide, is about $995 higher now, provides it for free to all candidates of the CMT program. So you can actually practice what you are learning. Apart from this, Wiley, who is the official publisher of the curriculum, provides their ebooks, which is generally at $225 at just $75. These are some of the academic partners that we currently have. We have totally about 50 partners globally, of which about 27 of them are in Asia itself. And we've created this space on Discord, which is where you are at today, right? Discord is a chat and engagement platform similar to other platforms, but much more detailed. We've created the CMT server out here, and anyone and everyone who is interested in technical analysis can join this server and access various segments. Of course, there are some that are locked or privileged and premium for based on roles. So, for example, some for CMT charter holders, some for candidates, some for students, some for professors, some for employers. And we post a lot of information, updates about competitions, updates about events that are happening, uh, jobs. So any job listings that we get posted to certain relevant channels based on what the qualification requirements are. So engage on this segment on Discord, keep your eyes out, read, learn, attend events, and so on. That concludes my presentation for the day. What I'm going to do is I'm going to ask each and every one of y'all to join the networking section, or you can post your questions and I'll be happy to answer them right now over this as well. So let me do one thing. Let me end the stream right now. What I'm going to do is I'm going to end this live stream and I'm going to go on to a more personal note. So if you see Discord, let me just quickly open it up for you. So you see there is this segment called networking out here, just below the streaming Q&A and networking, right? I want you all to join over there via audio, video. I'll be open to taking any questions that you have. We have about 10 minutes left in the presentation. So I'll see you all there, guys. Thank you.